Hello, good morning, and TGIF instead of a welcome today. Relatively choppy week with activities, though in a narrow range, but on both sides, is about to end, and we are heading into the last day of trading today. So, like every day, we are coming up with our updates on the financial markets. And JK, we saw Euro and JPY hit multi-decade lows yesterday. While our resilient rupee, it continued to stay in the same narrow range, rather not budging in either of the directions. So, what do you think? What's going on with respect to the Indian rupee? Also, we see LIC IPO next week, while Euro release its inflation data. These are major things coming up. Apart from that, so how do you see the markets? Acting up. How long do you see dollar continuing its strength?
Good morning, Shikhar. I believe when you refer to choppy narrow range, you only refer to the rupee because the rest of the currency world is in a different space. You see euro hitting a new low for the last 2 years. Then yen is hitting the 20-year low, and Japanese yen is going to a level last seen in November 2020. Sorry, Chinese yuan. I'm sorry. Chinese yuan seeing 6.69, which was seen last in November 2020. So currency space is really not, settling down. In fact, dollar strength is not abating as well. But Indian rupee really surprising everyone with its stability, help coming from central bank, does not want volatility, and possibly the market also preparing itself to face the flows which are likely coming in next week for the LIC IPO. Of course, as usual, we look at the stocks, had a very good session yesterday. And as we have been seeing, all the moves are driven by the reports on Q1 from major companies. And yesterday, Facebook, Apple, and Amazon were the major contributors to the rally, lifting the whole technology sector higher. Nasdaq index had fallen 22% from the peak of this year, but it has seen a good bounce, eventually lifting the broader S&P and Dow Jones as well. Market actually ignored the GDP, which surprised by coming on the negative side. But again, people are looking at the positive side of it. They say consumption is good, investment is good, but the main driver of the GDP to the negative was from the trade balance, which hit a record high. Imports soaring and exports not matching it. So that was the thing. And of course, the jobless claims for the week also came at 180, which is almost a pre-pandemic low. That's how the US economy is faring. And markets are going by the Q1 reports, which are quite good so far. But we are now awaiting the crucial PCE core inflation today. And next Wednesday, we will have the FOMC meeting outcome. So any moderation in core inflation today might see Fed talking not as hawkish as the market has been pricing in. So that can actually trigger some sort of a correction in the currencies, yields, and giving a boost to the stocks. Dollar, as I said, of course, has been on a roll, and dollar index has hit a new 2-year high at 103.90 plus, and surpassing the high seen in 2017 as well. So Euro definitely looking forward to what happens on the oil import ban from Russia after Poland and Bulgaria got, the decision from Russia that they are not going to supply them for not having paid in ruble. It's a big decision for ECB, or rather the Eurozone, to totally ban the oil import, because that can lead to a huge economic activity setback. And one of the German officials says that output can come down by as much as 5% if such a thing were to happen. Of course, we'll also have Eurozone inflation number today, which is expected at a new multi-decade high. So it's a geopolitics versus the domestic inflation that's at play here. Yen, of course, is the other currency to take it on the chin after Bank of Japan shot the market by sticking to their ultra easing policy and continue unlimited purchase of bonds to keep the yields from rising. So market has, at least some in the market, had expected a tweak in their language in order to arrest the one-way depreciation of the yen, but that was not to be, and it became a clean sheet for the market to sell the yen, which was somewhere in mid 128 and went as high as 131.14 before some sort of profit taking came in, and some official, I don't know whether it really matters, they said that the movement, one-sided movement in the yen is deeply worrying, and they are in touch with authorities of the other countries as far as the currency market movements are concerned. But market right now does not believe that anything big is going to happen. But my own feeling is that the Bank of Japan will not intervene in a hurry, but let the market get complacent, get one-sided, and maybe they will come once the market is on too much positioned on the side, so that there will be an impact of their intervention. So that's how the currency space has been. Gold, of course, has seen wild swings between 1870 and 2000 in the recent months. And yesterday we hit a high of 1871, but probably market was shocked to see such a fall after almost looking like breaking 2000 just 2 weeks back. Yes, of course, that 1870 has been again supporting. We are seeing some sort of support there emerging, and probably short covering, which has helped it to come above 1900. All things boil down to today's inflation data from US expected at 6 p.m. Coming back to, we cannot afford not to look at the rupee, although the movement has been restricted, because in my view, potentially this period of narrow range consolidation is going to eventually result in a big move, and going by the fundamentals, that big move should come on the upside, but we may have to wait for a week more before that sort of move is seen. Of course, this is subject to the central bank relenting, and right now, again, today, I feel the market will start to position itself more for next week's flow, particularly if there is no new high seen in the dollar index. So we will see 76.70 resisting strongly, despite all other currency moves to the lower side, and a possible move towards 40, 45 and below 40, which may not happen today, but below 40 is opening up our view for 76 eventually. Yeah, that's it. And have a good weekend. Thank you.
Okay, so yes, our rupee has been a bit resilient, but as JK mentioned, currencies more or less have been on the trending side. Though, JK, I'd like to mention that choppy and narrow was also for equities and yields, as we have seen. Other than that, it was, yes, it was surprising to see market participants ignoring, but I think that has been more on the, thought process set by the Fed central bank of acting more on the worrisome inflation as against the expectations of a higher growth. So I think market participants are still awaiting some sort of direction from the Fed, and today's release may give us some update on that front. While
because there is a bit on happening on the yields as well, which I did not touch upon. The spread between 10-year and 2-year US Treasuries, which is seen as an indicator of economic expectation, has now come down to 23 basis points from 43 basis points in last week. And this is indicative of the volatility in the yields. Indian GSIC yields of 10-year also went up to 7.15%. And given today there is another auction of 10-year securities, a cut above 7.15 will be bearish. So this is something, again, we need to keep watching out because a further higher move in Indian yields will be bearish for Indian bonds, and rupee will probably not be so bullish based on that.
Definitely. And I think we did saw some bit of correction in the Indian GSEC yields in this week from 7.15 coming back to 7.05 and lower levels, and retracing back up. So there's good kind of volatility that we see in yields. So, guys, let's see how markets act. Meanwhile, we focus on managing our risk as the world is heading towards a lot of turbulence with respect to the financial markets. Stay tuned for more updates. We say goodbye for today. That's it. Thank you.